Hey everyone, how are you all doing? I hope you all had a fantastic weekend. I know a lot of people experienced some snowstorms over the weekend. It was pretty relaxing overall for me, and I hope it was for you too. Just a quick reminder, I post my watch list usually a day or a good chunk in advance before I actually release my video, and I post my watch list on X at AB Trades. And the reason I do this is so you can, in advance, have the opportunity to go in and look at all the names that I will be releasing during my video. And the objective is for you to try and see how your analysis compares to mine post release of my video. So make sure you check me out on X and give me a follow if you'd like. I appreciate all the support. Don't forget, I also have my checklist market guide on there, the infographic that I've created that pretty much covers a lot of the things that I like to look for in setups. The more, the merrier. And remember, none of this is financial advice. This is just me sharing how I am approaching the market and hopefully giving you a few ideas to add to your own. So without further ado, let's get right into it. The first name I am covering is Applied Materials. Now, I have two sets of Fibonacci retracements here. And the reason being is because I have an external within an internal, right? We have our external leg, and then within the external, we have internal, right? And so the reason I'm accounting for both is because I'm taking my last known swing low before the displacement move up. Within that, assuming this gap doesn't hold. Now, if this overall area doesn't really need to be visited, it will be because we have a supportive gap here with a really nice broadening internal buildup of the overall expansion leg, right? From our higher degree daily, weekly. Now, within that weekly and daily, you have this really nice clean movement that I think, as long as we stay above 304, paired with our really nice 4-hour breaker here, you have a confluence of a breaker, really nice internal buildup, golden pocket, and a nice supportive gap. So we have really good internals here to pretty much play out to see if we can get another attempt into like 335 plus. And if we can kind of get some kind of buys within this area, I think it makes a good candidate to run into at least 340. Next up on the list is AMT. This one is one of my favorite setups here. You have really good, I guess you can label this as like Wyckoff or whatever if you want. But you have really nice buildup of price, kind of absorption on both ways until you finally break down and manipulate. Now, if this was going to be a true breakdown, right, the same way you have this structure here, lower lows, lower highs, lower lows, lower highs, lower lows, you change it, right? And now you get some really nice internals to, I think, eventually trade out into 185 plus. So I'm pretty much watching the development of AMT in between 171 and 180, about a $9 range to see if I can get a little bit more within that deeper discount, because we did just have our initial structure shift here from the 4-hour or daily as well, right? So structure did change. We did go from a sequence of lower lows, lower highs, lower lows, lower highs, lower lows to now higher highs. So if this is going to enter its buy side of the curve, I would like to address those buyers somewhere within this region. Now we already had a 50% tap, so it doesn't have to quite fully retrace further, but we do have some confluences, some nice inefficiencies here paired with a volume imbalance and the golden pocket. So if AMT does give me an entry at 173, it makes the risk reward a lot better relative to where we manipulated those lows. Sorry, let me put this at the top. I like it there. All right, so we had a really nice structural shift now that we're coming back into the discount. And what's nice about this too is, like, if it does work out, you also create those inverse head and shoulders at the bottom of a broadening, and those are the best types of plays that I like to capture because you get the near low of the overall trend shift, right? So beautiful, beautiful setup, nice Nice Wyckoff accumulation patterns here, nice structural shifts. My invalidation would be against 170. If we lose 170, then I believe this has failed. Next up on the list is Duolingo, and I am referencing this from the 4-hour. So you have really good, and the reason I'm referencing this is because one thing I want to point out is, and I don't have a lot of them on my watch list, but there has been a good chunk of software and or cloud names that have been firing off my radar. And what I mean by that is there's been a bunch of cloud and software names last week that were on my scanner very, very frequently. And a lot of them have similar setups to where they've been selling off, they've been getting beat down, but now starting to see some potential signs of life. And a good example of that one would be Datadog, right? We covered Datadog in 8x trades middle of last week, I believe. And we talked about how we have this really nice LRLR development into those broadening lows, but then you get that gap up followed by a really nice consolidation candle that then gives you the continuation. So from 116, we got a 15 plus move within, 3 sessions. And so when I go and look at Duolingo, it has a very, very similar setup to Datadog, right? You have this really nice LRLR down into those new broadening lows. You get the previous week low sweep, and then you get a gap up with displacement. So now for me, Duolingo, the risk reward is as long as we can stay above 147, I do believe this can at least attack 170 into 175 because that -2 deviation lines up with that gap and the previous month low. So I do think 170, 175 is going to be a pretty good target as long as we hold 147, right? So that's an $8 risk for a 20 plus upside. So really good 2 to 1 odds there. And I really like the setup, has a lot of similarities to Datadog. I would very much so keep an eye on whatever other cloud or software names look similar because I do think they are starting to set up. Next on the list is GLXY. Now, this has really good daily development. The only thing that I am keeping an eye on early this week is if we can actually get a full retracement, because here is where the confluence for me exists, right? You have a really nice inversion, a lower time frame breaker, and for me, it would make the most sense if you went from here to here, built it up into earnings, got a dip into that pocket, and then tried to rip for 30 plus. So I would actually like to see if GLXY can give us some kind of lower entry that then develops higher out, right? And you have a nice inside week. You have really good, I guess you can label it as an inefficiency. And like when you go into the 4-hour, this is what I meant by lower time frame breaker, right? The last known area high before you had a disruptive breakout. Now the question is like, will we actually get a retracement that low? I'm not entirely sure, but the confluences between like 25 and 28 look a lot more rewarding for me. Now you do have that really nice daily internal buildup paired with an inside week. And again, this one's also from a daily breaker here. So like you can hold this low, but if I get an opportunity here, I'll probably take a stab at it and see if I can get lucky within this overall leg. I really like the overall buildup though. I just like the confluences better in between that 25 and 28 area. And then I would have a nice risk reward to then target back up into 35, right? So the closer I can get to this, the better the RR becomes for me. Another similar setup with similar development is APLD. Really nice breakout relative to a nice weekly breaker here. Really good internal buildup. You also did change that structure on the 2-hour, so that overall LRLR buildup is starting to change. So I think if this doesn't, immediately go off on Monday or has some kind of gap up, I would be looking for an entry as low as 35. If 35 manages to hold, I still want to see this attack those 40 pluses into new all-time highs, right? Really pretty 4-hour overall. Looks very similar to GLXY, except this one already has that delivery candle, right? So the candle with displacement, buyers are showing their intent here, and I like how they are trying to make it an objective to run into highs. Because don't forget, there was a bit of weakness in the market, and this one was just kind of diverging against it all. So if the market does turn in our favor, we know that this one is probably going to be one of the more easier ones to trade, as it already showed that significance in underlying strength. So really like this. You have that reference candle here on the 4 hour. If we can build above, again, that 35 area, and you don't get an immediate continuation, I would like to see this like maybe stall a little bit and eventually run into 40 plus. Really, really pretty buildup. Looks very similar to GLXY. And with these kind of compression consolidation charts, you usually want to try and get an entry towards the bottom end or on some retest of a supportive fair value gap, correct? Next on the list is Frog. This one is a like under the radar name, and the only reason I'm covering it is because it kind of lines up with the software and cloud, and we are at discount, right? The consolidation sweep low here that created a nice little manipulation sweep post or pre-ER and then had really good results. You've now kind of come back from this swing low to swing high, and you've kind of, in my opinion, kind of been creating some nice compression in price. And I like that we came back into true discount. You came back also into that inefficiency and previous breaker zone. So I like how this is trying to develop now, and the daily is showing some potential here, right? You had a 2-2 rev with continuation. Now, I would really like to see a candle close through 59.5 to kind of confirm the overall move. And if that does happen, I am targeting a move into about 63, 65. So we just have to see how well this power gap of earnings holds, because you did sweep, right? Low on this from the last earnings in November was 53.50. We actually put in 53.38. So that was actually swept into that post earnings catalyst gap, which we know gap ups tend to support buyers. And now you had a really nice 2-2 reversal against a gap down, and you had nearly a pretty strong close. So if we can get follow through, I would like to see this attack. Now, this would fail for me if we do start to get daily closes under 50. Next on the list is NBIS group. And what I'm doing here is I'm taking into consideration kind of like the 4-hour structure. I would actually like to see something towards along this where you kind of attack the gap, respect the overall trend here, and like you can even draw it out a little bit, right? You're kind of already here. So maybe you go for some kind of sweep that manipulates and then runs back into like 104, 106. My invalidation for me on this would be if you get a daily close under 89. You lose 89, then this kind of fails. You are at a supportive like little trend here. So see if this holds. If it doesn't, I would like to see some kind of early on gap attempt that maybe then finds some kind of recovery. Now, if you do attempt the gap and you do not get a strong reversal candle, understand that if I invert this, y'all, you could potentially do this. And then you start a sell curve, okay? So the only reason I'm bringing this up is because you're getting really close to that discounted area within the 4-hour, right? You go from here to here. And there is pretty good confluences as well. Again, another breaker. You guys see how a lot of this looks very similar, right? I love setups that have some kind of gap, whether it's a actual existing gap, fair value gap, some form of PDRA paired with some kind of breaker, and then the golden pocket. Like those three are my bread and butter when it comes to looking for these kinds of trades, because of the consistency that comes from them. Now, the key metric there is identifying where that retracement is and looking to see and actually being patient to, let that trade into it. So keeping an eye on NBIS early on week, and validation would be 89. If that happens, then I'm looking for both of these gaps to end up filling. I won't spend too much time on AAOI. I'll just kind of cover this quickly. Really, really good build-up. You did I'm not a fan of this failure break here. The only problem with this failure break is you did not take out those highs. You have 41.35, 41.39, and then you have 41.47. And then the previous month high is 41.96. So you're leaving a lot of relative equal highs there. I would like to see how this develops within the golden pocket again. I don't know if this will get attacked because you've kind of already displaced into it and then recovered. So I would like to then now utilize kind of this little hourly zone here. So I'm looking to see how AAOI reacts in between 33 and 35. If we come down into it and wick back up, I think that makes a good range trade that you could then develop back up into 41 plus. Now this one's kind of already traded out from the overall discount, right? 32 to about 41, but you haven't quite gotten the full breakout if it is going to be one. So I think the risk comes from how this gap holds. If AOI loses like 34, then I do think you probably start to sell off and this ends up changing the narrative a little bit. CSIQ, kind of what we've been expecting on this one. You had really good daily development against a OB and gap. Pretty much wicked, came back into the range, and then you gapped up. So now the key thing is when I zoom into the 4 hour is like, okay, we came into the weekly discount. We're holding pretty well within the internals. Can we now stay above 20? If this can stay above 20, I would like to see this kind of retrace into the gap and eventually start to trade out. My first objective would be 24, 26, and then maybe 27 plus. So the key thing now is, okay, we've gotten the development to displace back through the gap, paired with another gap up, can now we defend this zone, right? So in between 20.4 and this is going to be the area of risk relative to these lows here. So it's like a dollar risk for like 6, 7 plus potential. And when you look at this weekly, like it looks like a pretty sick chart, especially if I go ahead and delete everything, right? Pretty nice chart with a nice manipulation sweep there. You haven't had the consistency through 24 because that is a weekly OB. So like if you actually get a daily close above 24, that kind of confirms this even more. What we do not want is that this previous or this current week candle or last week's candle swept the previous week into that bearish PD array and it ends up developing further down. Because if I invert this, right, you do have some potential there. So we really want CSIQ to get through that little daily, weekly OB above 24. Because if not, you could still do something like this, right? You push up into that and then reject lower and kind of build this out even more and maybe go for a 3 driver into earnings. So that's something that we do have to kind of keep an eye on, right? So just something to make note. Make sure you mark out that 26 because it's going to be very important. Next up on the list is RKT. I love trading this one, especially when it comes back into discount. You can kind of see the nice buy side of the curve that it's in here, right? We've only been hunting buy stops, pretty much swept into new all-time highs already. And now we came back into another established area with the golden pocket, really nice fair value gap and a breaker, and it's the overall discount of this swing low to swing high. The only problem is RKT didn't quite fully take this low out, so I will be watching for reactions on RKT in between 19 and 21 to see if I can get an entry pre-FOMC, because this could have some good reactions post. So it's like overall, like the structure on this is still really nice, right? Higher low, higher high, higher low, higher high, higher low, higher high. Do we continue the trend? And if so, this is where you do it. Again, this is the best risk reward, because when you're in an uptrend, remember y'all, you don't want to be the one buying here. You want to be the one buying here. That confirms the overall leg of that trend. It just gives you better risk reward and a better output slash yield in returns. This one's a bit more high risk, but it is Tesla and you do have earnings. The only reason I'm covering this is because look at what you did, man. It's impossible to ignore these discounts, right? Especially when they have confluence. You have a discount of the overall swing low to swing high, right? You anchor your retracements. So I grab my swing low to swing high because you did go from like lower high or higher high, lower low, higher high. I mean, you're kind of following the broaden here, and then you kind of retrace back. So within the higher time frame leg here, you are back in a discount, and I do like that you tested this little bullish PD array and kind of respected it really well. And then from that gap down, you had a nice acceleration through price. So when I zoom into the 4 hour, now you have good internal buildup, right? So earnings are on Wednesday, so you might consolidate until then. But if it didn't have earnings, my ideal scenario would be something like this: push back into the gap and then accelerate back up. So if Tesla didn't have earnings, my price target into this week would be 470. But it's hard to ignore like the overall daily development. And remember, when I talk about you coming into discount, if you don't catch the initial push into that discount of the overall trend, whether a higher low or a lower high. If you miss that, how does price deliver and how does it respond afterwards? Very nice delivery. This confirms that, right? That discount goes from 419 to 450 in 2 days. And now you have a really nice daily 4 hour that's trying to now develop and use that breakout candle as a reference point. Remember, we don't buy displacement, we sell it, and then we buy whatever comes back to retest or restructure those displacement candles. We are now starting to get into my favorite charts. Next one on the list is PM. This one's not like the top three, but I'm covering it because you have really nice uh, development here. And it's really hard to ignore a lot of these XLP, like LRLR type situations, especially with what happened with Costco. And I think a lot of them are starting to now try and follow, right? So you have this really pretty LRLR. You see how you create exhaustive lows against this little inefficiency here, which also creates your previous month low. And then you go from here to here, higher low, higher high, higher low, higher high, higher low. And now I think you're working on the next expansion to take you into a gap fill into that 179. So this would be my initial target, especially with a really pretty inside week. When I go into the weekly, really pretty hammer inside week that came back and retested your previous month highs. That is really, really good to see. So if this inside week opens inside, I would like to take an opportunity to potentially then target out a swing into earnings, post earnings, maybe some February 220s as like a little swing lotto to see if I can get a gap fill into that, right? So really, really pretty chart. I like the overall development and I like this little sweep that pushes back up. And I just really like the higher time frames, man. Look, inside 2 week, inside week, you have a monthly displacement. And I mean, with this kind of monthly, especially with a 2-2 rev on the month, to me, it really looks like you want to target that monthly OB and maybe even all-time highs. It's very ER dependent, but with the way a lot of XLP names are looking, they just look so freaking good. Now, one of my favorite charts here is actually Pepsi. Whoops. So Pepsi, man, Pepsi looks phenomenal on the weekly, and the reason I say that is because this would be my overall target, but look at this, man. Look at what could potentially exist here. So you just came into a really nice weekly and monthly. Look at your monthly inefficiency that did sweep a lot of those externals dating back to August. You came back into a supportive monthly discount and pair it with a monthly imbalance. So not only did you sweep, you pretty much push back into the range. So then when I go into the weekly, you have a lot of really nice like LRLR on the higher time frames that if it breaks out, this can do 160, maybe even higher. Now you do have earnings coming up into the first week of February, so it really depends on like how you want to go about that. But based off of what the monthly did and how you took out all of these externals here, so if I come in and annotate this, and we go in and call this turtle soup, aka TS, because you turtle pokes its head, puts it back in its shell, and the overall development of this looks crazy, man. So like if you didn't have earnings, I really would think you end up doing something like this. And you attack like at least 155 into like 157. But man, this just, it looks so good. And like you even have a weekly manipulation here if it does develop. So if I come in and anchor this out and you do this, like look at where the -2 is. -2 lines up with that LRLR. And if Pep ever manages to get some kind of close back through like 156, 158, it changes everything. But yeah, Pep is one of my favorite charts, but this one's more of like a long-term type play because this could be the start of its MMBM, right? You have the initial sell here, next leg, third leg, final leg, and now you're trying to reclaim that. So what if this is the first one and then you have the second one and then it changes the overall narrative? So like for me, this one is definitely something that you probably will need to get maybe leaps on and then just see if that weekly plays out. Next one on the list that I really like is PG. So like just looking at the weekly, I'm going to show you something else. I'm going to show you Costco. This was Costco's weekly before it did the Costco move. If I go back into PG, I know they're like different names, dude, whatever, but it's like the setup always is the same and price is very historical. Very, very similar action to Costco. And what I really like about this is that you have market structure shift, right? Oops. So like let's try it out. This is the first time on a higher time frame scale Procter and Gamble finally changes its structure. It's literally been in a it's been in a higher time frame downtrend since, okay, so you go here, 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 since literally February of 2025. And this is the first instance on the daily where you change it. So whether or not you break out further from here, you get some kind of retracement, right? This is a weekly reference point, and I'm using this weekly reference point because you came in to a really nice OB here. So if I come in and annotate this, and I go for the 50% mark, and I extend this out to wherever we are, boom, look at that. Look at that. And not only did you do that, but you actually swept all of these externals dating back to 2023. And now look at the reactions from that. This is not just some kind of, oh, we got a little external sweep and now we're recovering. No, man. This is displacement with intent. This is displacement with an objective. So now the key thing is, do you retrace here or do you get a further retracement here? Regardless, I think you can start building out some PGs for maybe like a year out and eventually target like 165, in my humble opinion. Because if we take this manipulation here, I bet you the -2 ends up somewhere in like the 61, 65 plus. Oh, would you look at that? Look at where that -2 is. 164, 169, right on the money. Just a phenomenal chart, guys. Next up on the list is EOG. EOG, now this one's just taking advantage of like this little daily broadening. And basically what I'm doing is like, we already got the broadening low sweep and now we're working on the slow progression back to the upside. My target would be 115 if it does work, and my risk to reward is against 103. So as long as this area here holds, I would like to see some kind of broadening expansion push back up. Just a decent low looking chart that did pop up on my scanner, and I thought it was pretty interesting. SNPS, this one's more so like the daily delivery here. I think I'm on the wrong one. Yeah, there you go. So this one's more about the daily and 4-hour here. And it's against this inefficiency paired with previous month high. So again, very, very similar to a bunch of the other things. And then we have our standard deviations if it does break out here. So as long as SNPS can stay above 482, can we make a move into 540 plus? If we get a daily close under 480, 480, 481, I would then target a short down into 425. This was just kind of really nice internal buildup. I mean, daily looks pretty solid. And so I have to kind of play it by with what I'm seeing relative to that daily chart. And yeah, some notable names that maybe you want to chart on your own: HD, BTDR, NU, and Amazon. Also pretty nice looking names if market shows continuation this week, or if there's any kind of upside strength. Those names look really, really good as well. And that pretty much concludes our watch list. We hit the 30-minute mark. We're usually pretty good with hitting the 30-minute mark. Hopefully today wasn't too sped up. I think by now a lot of you should. And I emphasize this a lot because I repeat the setups over and over again, and they all look very similar. And a lot of you can attest to how well those setups play out, right? So hopefully I'm just allowing you to see price action in a different light. And all I ask for your support is by subscribing. Again, I still want to get to that 5,000 mark so I can release I can release my educational content. I already got like the blueprint written out and how I want to separate each video and go about it. I just need your support to get into 5,000. So share my page with your friends, family, whatever else you want to share with. And I'll see you all next week. Peace and love. See you.